The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 15th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine, 877-927-6648. You can send me an email, steve@tfnn.com, just in that heading. Go ahead and put radio show question. That way I'll be able to easily identify it. I watched a little bit of My Cousin Vinny again last night. You just can't help to turn on that when it's on. It seems like it's on all the time. In any event, yeah, any ping will do inside the Tiger's Den. So let's go ahead and get this show started on, as Jay says, Sake Thursday. Sock it to me. So let's go ahead and get started. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 29 points at 21,345. S&P is off 9. NDX 100 down 0.8% or 45 points. We'll start there. Let's start with the NDX 100. See if we can get a gauge as to what it's communicating to you and I out here. We'll start with the 30-minute chart. It's most certainly trying to identify a bottom. How do we know that? Because it formed one of your favorite patterns. One of your favorite patterns when you push on the strings and you do it with less energy out here. In this case, that's what it was doing this morning. And then you wait for the cavalry to arrive. Cavalry did arrive. Nice little bull sash, bullish engulfing candle it formed, closing above Stevie's red line. That's important out here. And now what the 30-minute chart is communicating to you and I is it needs to take and close above its resistance zone. The resistance zone is the top of that 30-minute profile, 5690.35 out here. I don't know if it has the energy to do it or not, but it certainly is trying to form a bottom, much like it did at the top. Same pattern up at the top, same pattern now down at the bottom. So that's what the 30-minute time frame chart is communicating to you and I. If I go take a look at a 60-minute chart, we don't do that all the time. We'll do that for a specific reason, though. That specific reason is because I have there. No, there's a more specific reason than that. So on the way down here, what we've seen in the 60-minute time frame, we've seen a number of attempts during the hourly time frame for the bulls to establish themselves. Those attempts each have been with the formation of a hammer candle. You can see one right here. Now, for those of you that are just listening, the right here is at about 3 o'clock in the afternoon, 3 or 4 o'clock in the afternoon, back on the 14th. That would have been yesterday. Nice little hammer candle that arrived. Earlier in the morning, about 7 o'clock, a nice little hammer candle that arrived. When you see closes below these, it tells you that that group of warriors, they just simply, they're gone, or they were run over. And, and the expression that we like to use, if you're long, you're wrong out here. Well, didn't take long on the 30-minute chart to identify the next bottom. And on the 60-minute chart, voila, another hammer candle form. Now, the 60-minute chart is a little bit more bullish than the 30. And I say that, or I suggest that to you because Stevie's red line has been the resistance level on the 60-minute time frame. Now, what it is also trying to do is get above a 60-minute market profile. It's there right now, but this chart here is not going to conclude until 2 p.m., so we can't reach a final conclusion as to whether or not it's got the energy to do that. But what we can do is we can come back here, we can take a look at our Nice little heat grid, our TAS market profiles. And what we can see on the 60-minute time frame as we blow this up on my screen out here, what we can see is there still are more issues with price below the bottom of a 60-minute profile, that being a total of 47. And there's only 19 issues trading above it. So it says it's going to be some real heavy lifting for the NASDAQ 100 to actually take out those lines of resistance. So then what does that say to us? It says you should anticipate another push to the downside. Now, if this changes here, then we have a whole different game plan out here. And in the case of Maria, she said, for me, it's still a sale, and that's Apple. And I've posed the question, is Apple a buy or sell out here? And I think because of the weighting inside of the NASDAQ, it's really important for her and I, you and I, to be able to try to figure out, is Apple a buy or a sell? So there's a couple different ways that you and I can go take a look at anything. We can go take a look at the ETF this way. It's nicer when we take a look at an individual stock, even though the weighting is so heavy in it. But in the case of Apple, let's go do that. So we're going to take the 60-minute chart away here, and we're going to immediately go over to Apple, because it's really an interesting chart as we take a look at it right now. And the reason why I say that it's interesting is because what we have today inside of the heaviest weighted stock inside the Qs out here is we happen to have a test of a swing point. And it is right now with light volume. And I anticipate it's going to be with light volume. Now, the question is the close going to be above the bottom of that swing? We're talking about June 12th out here. There were 72 million shares. You've done 20 million shares. Not even a tweet. By the tweeter-in-chief out here could probably get volume moving to the downside to take that out. Nonetheless, if you were going to go ahead and get a close below that low of 142.51, and really what you and I would say is you'd have to really close below the weekly profile out there, 141.72, is it really going to go ahead and get their skirt in a tizzy out here? And the answer is no. So inside the Qs, look, the larger number of issues on a 60-minute time frame basis still needs to flip to the positive side with regard to its market breadth. But the leader out here and that's in an equal weighted viewpoint, right? We just took a look at the number of stocks, where they're trading, relationship to the top or the bottom of the box out there. So not weighted out here, but this is the weighting. Inside Apple, this says it's bottomed. Now, that's what this chart says, because this is the old, if you can't bust them down, you're going to go ahead and bust them up. And so for those of you that believe the Qs are going to fall apart, and then those of you that would believe that Apple is a big part of that, well, guess what? Ain't going to happen. Just not going to happen out there. So that means we should continue taking a look at the NDX 100, the Qs themselves out here. Now, the Qs actually, I don't know if they got to a new low or not out here. We'll check it out. One other chart that you and I can look at inside of Apple, and this is a very positive for the Qs out here, is that my little money flow indicator, this is a 20-day analysis that I do, is back above the zero line. That's the very bottom panel that you're looking at on my screen out here. And one thing is for sure, when that indicator is above zero, being short this specific equity is not the right move out here. Now, granted, it's not above Stevie's red line, which is at 151.02, but this is telling you it's not ready to move lower out there. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So if we step over, take a look at the Qs, no volume here to the downside. All that was expended back on June 11th and 12th out here. That volume there, that test, we haven't seen the Qs actually get down and test the very bottom of that swing point. Do we care? Nah. We really don't. We have enough information with regard to what Apple just did. We can see that 104 million is being met with 35 million shares thus far at 118 in the afternoon. You've got a brand new daily profile that formed. That level was tested. That's at 138.11. As long as that level holds a support, this would suggest to both you and I that price would move up and test at least the 141.33 level before it provides us with any information. That's what the Qs are communicating to you and I. Let's go take a look at other elements here. Now, with regard to, I'm sure the other question might have been, or another question might have been, well, what are the other equity futures contracts showing? Well, the interesting thing here is one of the weak links would call the Russell 2000. It formed a similar pattern this morning. It got to that seventh wave move to the downside. Then it had a nice little bullish engulfing candle it formed. Let's go ahead. Whoops, I didn't mean to do that, but let me just go ahead and get my cursor out here. It might be easier. So you can see that wave count. Price is moving lower than later at about 8:30 this morning, with less relative energy. In come the bulls. Nice, big, huge move right off of Stevie's red line at between 9:30 or 10 o'clock. Yeah, that's a 30-minute chart that we're taking a look at. What it needs to do, though, now is it needs to really clear that 14.1380 level. That's your area of resistance. That's the top of its current box. I don't know if there's going to be another box that forms in an hour or whenever it might form. But right now what we know is that is a level of resistance. Now that box is, or the structure of this is bullish because the center is much closer to the bottom of the box. So 14.1380 is a very likely outcome for the Russell 2000. Doesn't mean if you're short to close it out, but you want to be able to anticipate what price is going to do. There are the patterns inside of the Russell 2000. No guarantees, but those are the patterns that you look for. Now, kind of switching back to the NQ out here. On the daily basis, what we also know is that the trend line, in effect, since the election eve out there, which that trend line is still intact. Yep, it was just a test of the trend line, a test of a hammer candle inside the NQ from 2-3 days ago. So far, so good for the bulls. 58.27 is a key level of resistance inside of the NQ on a daily basis, that being Stevie's red line. Now, I didn't get a chance to check the emails, but I'm sure there may be questions about Goldilocks and silver and all those things out there. So why don't we go ahead and take that for the listeners and see what it is doing. So it's off trading out at $12.55, not truly down $21, but still continuing to move lower. So let's go take a look at it. And where is it likely that gold is headed to? Now, if we're going to use just the current contract, it gives us a number of 1241. So just keep that in your memory bank out here. But my preference is to go take a look at Stevie's synthetic contract for gold. So you got 1241 is a price target out here. 1250 is the weekly synthetic level of support. Our low so far today is 1250 to 70. So to me, that is a key area of support. You can see on the 60-minute time frame, that's the panel number 2, that's the left-hand chart that you're looking at, has some support at 1253.90. If, in fact, gold were to turn, you'd need to see a close above 1258.70. Am I forecasting a turn? No, I am not. Not just yet. There's nothing here to indicate to you or I that that's what's going to happen. If, in fact, gold were going to turn, you would need to see the yen show some signs of strengthening. And if we go take a look at it, let's just go take a look at the futures contract for the moment. Let me just find that. Where are we? Okay, here we go. And you talk about moves in the marketplace. The largest moves in the marketplace have been in the currency side, and they've really been inside the yen. That thing has been moving all over the place out here. Now, 60-minute, it's dead meat. There's no sign of any type of bottom out here. Okay, so it's just continuing to show its weakness. If we take a look at the 240-minute chart, same thing out here. If we take a look at the daily chart against the futures contract, the exact same thing. And so that says, whew, on the weekly chart, this thing may want to go ahead and move lower. And if it does, it gets it down to 88 cents. And gold's not going to move higher. May move sideways, but it's certainly not going to move higher with that setup out here. If we really take a look at the actual currency pair versus the futures contract for the yen, and this has got a 15-minute delay on it, what you will see as soon as I go ahead and populate this with the there we go, with the weekly, what happened overnight. What happened yesterday, and there was a pretty large move here, but what happened last large move to the downside, and then that reversed itself in the afternoon after the Fed, after the the Q&A period by Janet Yellen out here, is it found support. Now, the support would be the weekly bottom of the box, 108.87. The actual low yesterday was 108.83. That is a test. And not only has it been a test, it's been a test and a slingshot off of that. Now, price is about ready to get to the weekly point of control at 111.08. You're at 110.89. Again, a 15-minute delay here. This says to me that we ought to see that's probably enough work that's been done for the Japanese yen. And I would say I wouldn't expect gold or silver to do a whole heck of a lot. Now, if price overtakes this area, that's a different outcome, which would say you'd see the metals continue to crater. But that's not what we have right now. So price inside the yen is at or near a resting point. So we ought to see the same kind of move-ish inside of gold. Now, whether or not the resume to the upside here inside of the yen occurs, that would be weakening. The currency would be getting weaker out here. That I don't know. That what we can say is resistance is about the 112.56 area. If we go take a look at silver, let's go back to our profiles, take a look at silver. Let's go take a look at the synthetic contract for silver. Silver's off about 42 cents as we speak right now. 60-minute chart does have a level of support one can watch. That's at 1664. But that's it. You don't have any kind of support on the daily, on the weekly, on the 240-minute chart. You just don't have it. So this looks like it's dead money as well. And so where would silver head to? Where would silver head to? I guess I just go back to the daily chart out here, and I think you have to target the May 9th swing point out here. And the May 9th swing point, let's go take a look at that pricing level. Anywhere from a low of 1606 to a high of 1631. You're trading at 1672 right now. You haven't tested that level, so you've got to target that silver wants to get to 1631. To close inside there, then you're looking at 1606. Close below there, and then you've got to come all the way back into the December 2016 area at $15.82 out there. So silver just simply not looking good. But you and I knew that days ago. We knew that days ago. You got the Dow off 31, S&P down 9. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 35, S&P down about 10 points. Have a request to go take a look at whole foods market out there, whole paycheck, as some like to refer to it. So as we go take a look at it, let's start off by taking a look at this check. What a huge day to the downside Whole Foods market is having. What was the question? Is it a buy? So as we take a look at it, it's gapped down this morning, today, 4.9 million shares, right into a sign of strength out here. That sign of strength was on the date of April 10th, 27 million shares. So it is pulling back with lighter volume, but it's accelerating, right? On the way down, it's a confirmed A to B equals CD, if you want to take a look at that. And so this could be something that could be a buy, and the type of buy you'd like is a Gartley buy. And the Gartley buy, what you like to have, Danny, is you like to have an A to B equals CD that gets completed. Now, the one-to-one level on this is 32.32. Price is also trading just below its weekly profile. Only 60% of the time are you going to see a one-to-one A to B equals CD pattern form. As you're moving into the D point, as this is here with a wide-ranging bar, that's just communicating. That's one of the signature items that indicates to you and I this is going to be one of those patterns that does more than that. Let's also take a look at where the retracement levels are, right? Let's just see what matches up with the 0.618 retracement level, just out of curiosity. It is the one-to-one level, but we're going to say, nah, we're going to pass on that. Right around 30.50 is the 0.786 level. I would say that 0.786 area, or the 31.33, so between 30.06, 31.33, where the real breakout took place. And in this case here, we'd say it's probably the day before April 7th would be the level to be taken a look at. So right around the 30 area is the place. That would be a Gartley buy. Now, it doesn't qualify as a Gartley buy until you see some type of bullish reversal signal. So you'd really have, so I don't want to just give you, I'm giving you price target areas to be watching that says, today is definitely not the day. But then you want to see things kind of cool off volume-wise, and you want to see some type of bullish reversal signal. Then you'd have your Gartley buy pattern inside of Whole Foods. Now, if we put this back on a longer term, let's just do that, because I was just looking at a screen full of data out here. The monthly chart happens to have completed a Gartley buy pattern. Did that back here in December 2015. Hasn't really moved a whole lot, has it? So when we take a look at, hey, what's the potential out here, I'm going to go ahead and get rid of the profiles, although you'd certainly pay attention to those. You know, does this have a ton of upside to it as we take a look at a monthly chart? Maybe, because on a monthly basis, you still had a move with volume back in April out here. So it's worth taking a shot at. But you know, you're going to have some pretty stiff resistance at the high from May out there. Perhaps you are. And that's at a 38 level. So wait for this to get a bit lower out here. Ideally, you'd be able to try to buy this in the 29-ish type range out here. But I don't know that it'll get back there. You'll just pay attention to those price targets. Look for some type of bullish reversal signal. If you don't get it, then that just tells you that price is going to continue to head lower. And that is taking a look at Whole Foods market. No other requests. Well, let me just check real quickly here. So with regard to gold, I'll go back to it because we just took a look at the metals and we took a look at what did we take a look at? We took a look at the yen. You know what? There was a chart I had earlier. Let me see if I still have that out here as I look. Maybe it's this one. Hey, there you go. Here is the GDX. Now, these horizontal lines that I have on my chart out here, these are referred to as horizontal trading range boundary lines. Now, these lines out here, these horizontal ranges, for my purposes, they were popularized by Bud Rolfs out here. He called them primary trading ranges, and his work was different than my work because I've automated this, and so it's similar, yet it is different. In fact, it is very different from the standpoint that my monthly and weekly and daily horizontal trading ranges are going to be different. It always depends upon what time frame it is that you are trading. But here's one thing that we know. When you see this large dashed line out there, that is the line where price has traveled the most since, in this case here, going back to 2006. That, by the way, is $22.47. We're at $22.02 out here. So from a longer term, it's always good to get the longer term picture. And from a longer-term picture, this could be a level of good support. If we were to see the GDX for some reason really bust through this, it opens up the door for 1411 eventually. But right now, price is really just sitting on a area of support. And for those of you that were wondering, hey, in that move back in 2016 when the GDX got up to $30.83, why did it stop there? Voila, now you know. That was the cap inside of the GDX. That was a horizontal trading range. That was established well before price got up to that level. So we pay attention to those. We could probably put Whole Foods Market up here. I don't know what how much data here is a monthly chart. Let's go see what its monthly levels are. Let's go change this though. Let's instead of the monthly out here, let me see if I can add for you the weekly levels. Oh, that was really adding it. So let me do this here. That we didn't like that. Let's adjust it a bit this way. And so in the case of Whole Foods Market, let me just change this now to weekly because the there we go. So let's get this populated. And so back to Whole Foods just for you for a moment, Danny, 32.38 becomes the weekly horizontal trading range level. Now, what I'm going to do is I'm going to get rid of the midpoint from the weekly perspective just to get rid of some clutter. So as Whole Foods Market got up to the 36.75 area out here, and again, we're looking at the weekly candle, but you and I are just most interested in the body of the candle, the true essence of price. We don't really care about the emotional side that occurred during the week, the upper shadow, upper wick, lower shadow, lower wick out here, just really the body of the candle. So as another price target area for you to look at, I would watch 32.38 to see if that holds. And if it doesn't hold, then it's got 30.45 written all over it. So that's using the horizontal trading ranges, for different individual equities out there. All right, back to the rodeo out here. And hey, as long as we're talking about horizontal trading ranges, let's go take a look at how they apply to some of the indices, right, that you and I are taking a look at out here. Oh, and if I haven't covered it, if you're asking me the question, what do I believe the market is longer term, an intermediate term out here, right? So we're not looking at this daily noise. It's still bullish. It is still going to move higher. It is not going to move higher in a little way. It is going to move higher in a huge way out here. Now, you might say to me, well, where do you think it's going, Steve-O, in kind of like the intermediate term time frame? And that would be a great question. And over the intermediate term time frame, if we go take a look at the S&P 500, we'd go ahead and utilize, I think we might have done this yesterday, and if I'm just repeating it, my apology to you out there. And if we take a look at the horizontal trading range levels out here, 2463 on the daily, 2509 on the weekly. So here we've got 2 votes for the 2500 level, and the midpoint is 2512 on the monthly. So a good range for where price is headed to is 2,500. After that, it's then headed to 2638. Eventually, it gets up to about 3,400. It's not going to happen immediately, but it is coming to a screen near you. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So a couple of questions out here. One was if we could take a look at light sweet crude. So let's go do that. Right now it's trading out at $44.44. Hey, if you like fours, you got it. In order to take a look at this, I think what we'll do is we'll just simply go take a look at our profile levels. We'll look at our synthetic contract. And on the synthetic contract, here's what you and I know, Danny. We know that price broke through yesterday. Price broke through some key areas of support out here. Oh, I got silver up. I can't give you light sweet crude until I actually click on the right thing. But we also know that price broke through some key levels of support yesterday, both on the daily time frame and the weekly time frame. Those being 45.60 and 47.23. So from that standpoint, nothing looks good out here. The 60-minute profile, price is trading below it. That profile is 44.51, so that's not good. This says what it's really doing, it's testing a swing point at about 44.27. You're trading at 44.45, so that is at least a possibility of a bottom. The swing point I'm referring to is back on February 8th, 2016. Now, if price were to close below 44.27, then, Danny, it could be a test of the bottom, 38.94 out here. If we come back to these different profile time frames, I'll just switch 60 to 30. And on the 30-minute, we can just see just a sideways-ish type move out here. Prices below that profile as well. So the only thing that I think you or I can hang our hat on at this stage is that it's testing the February 28th level. There's no buy signal out here really on any type of time frame. Everything is really more of a sell signal. The only potential buy is a test and rejection of a swing point, that one from February. Here's the 30-minute chart for crude. You can see just travel inside. There's just nothing here to give us any indication that this has formed a bottom, at least not as of 1:44 in the afternoon. So I hope that assists you with your question on, hey, can we go take a look at oil? Because we did. James wants to take a look at Kroger. So he's looking at Kroger, and he's watching 29.75. So let's go back and take a look at Kroger. That was the first grocery store that I ever worked at as a bag boy. That led to being a bag boy at a company called Great Scott, if you can believe that out there. And then that led to working at Tyre's Green Tree Market in a little area of north of Milwaukee, Wisconsin. That, folks, was, when I say a little market, that serviced all of the folks that basically lived on Lake Michigan, which included, what was that big boat that went down, the Fitzgerald? All these folks would, this is my introduction to money. Total. The school I went to for a very short period of time, by the way, the kids drove the kids' parking lot, which I thought was a teacher's parking lot because of the cool cars that they had, was actually the kids' parking lot. There were kids being dropped off in limousines. I sort of didn't fit in as a kid from Detroit. It was the middle of my senior year in high school, so it didn't necessarily matter that much. But so they went ahead and they got me a job at a grocery store. Now, at that grocery store, everybody had an account. They had an account, and their wait staff or their staff came, butlers, maids, whomever came to pick up their food. And that's where I learned also, I'm going to have a Mercedes in my lifetime. All those things come true. You attract what you want in life because of that wonderful smell of leather. Now, the leather they used back then, much better than the leather that they use now. Yeah, that smell just lasted, it seemed like, forever in those cars. But anyways, and that's where I learned how to eat brats and drink beer and many other things out there. But with regard to Kroger, doesn't look good. You're asking about $29.75 and you're $24.64. And you've got huge volume that has come out of this thing, and you're at the low of the trading session, and it's trading right back into, a potential gap up. So where Kroger is likely headed to next, let me put this, see if the weekly chart might show that gap a little bit better. Does it? Does it even show it at all? No, because it was intra-week out here. So I've got to put this back to the daily time frame for you. So, James, where this is likely headed to, maybe, looks like the trading session from October 30th, 2014, and the high there is 27. No, I got that wrong. You're trading below that. That's the wrong gap. I'm sorry. Let me take that back. Let me move this in a bit. It's going to trade into perhaps the date of June 18th, 2014. 2339, 2364, is the area. Was there big volume there? No, there was like 7 million shares, 15 million shares. You're coming down today with 53 million shares. You're not there just yet. Could that be a level of support? Yeah, it could be. But if it's not, what sticks out to me, so if I put this on a weekly basis, and the same to you, what really sticks out to me as an area where Kroger could trade all the way back to is really the prior weekly swing point, which is somewhere around $17.57 out here. You can see you got volume for the week on the way down. You've got, in essence, a confirmed A to B equals CD. If we take a look at it, let me go. I got to turn that tool on. I don't know why it's not on. It's not on because I turned it off accidentally. Where is it? No, it is on. Wow, that's pretty weird. Says it's on, but it's not on. So I can't really give you an A to B to C D on this chart out here. I can do it mentally, right? So we know the A point is up around $42 or 43. The B point is around 28, so 28.38. So you got 16 points. 16 points subtracted from 36. So this says $20 is so that's at that 1757 area. Is 1757, 20-ish area. Looks to me, James, like where Kroger is headed to. So best of luck with that trade out there. Let me just take a quick peek here before we end up going to our last break, see if there's any other requests. I don't see anything else out here. I don't see anything else inside the den. If there is something inside the den you need me to look at, please go ahead and type it in. Yeah, Kroger is a great chain. In fact, this was certainly a high-flying stock here for quite a while. In fact, if I look at, just kind of curious here, did Kroger, that's a weekly chart we were looking at, but let's look at it on a daily basis. Did Kroger show signs like many stocks, ETFs, indices do as it was making its top? Was price moving higher, doing less relative energy out here? And the answer is no, wasn't doing that on the daily. Let's go see if it was doing it on the weekly out here. Just see if we can try to identify a pattern. Yeah, on the weekly it was. So as Kroger was moving higher, right? As Kroger was moving higher back in 2015, and this chart here for some reason is not populating today's data in here. I don't know why. It doesn't matter. We already know today's data, but it was making that pattern that's associated with market top. Same pattern here that's associated with every single major bear market, and we don't have that present. So without that being present, it's another reason why you and I are saying there ain't no bear market anywhere near. Markets can move lower, yeah, for sure. But is there a bear market around? I don't think so. So that's our take on Kroger. Let's go back and see what else is moving out here that we should take a look at. Got Bitcoin. I don't know about that. We don't want to look at Bitcoin. Got Alliance Data Systems. I don't know. We'll figure something to look at for the last 4 minutes of the show. Steve Rhodes with TFNN. If you're ready.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 30, S&P down about 10. Let's go out to Colorado and speak with John. John, thanks for calling. Thanks for holding. How are you doing today?
Good, thanks. How about yourself?
Excellent. Thanks so much for asking. And you want to take a look at Great Panther. GPL is the ticker symbol. Tell us how I can help you and what you're doing.
Okay. I've been in it a while, so I've taken some heat on it, and I've got my stop currently at $1.13. And I'm not it as an expiring option kind of trade.
Okay.
IRAs, and so I've got some time, but because of it's been getting closer and closer to that 113, that I was wondering if you could pick up on if I maybe would be wise to lower the stock a little bit more, or what your thinking might be on that.
Sure. So so that's great.
Please.
Thanks for laying that out. So the 113 level ends up being about 1 penny below the June 5th area, that swing point.
Yeah.
And 1.8 million shares were down there, and today you're down with 1.1. So it seems like similar-ish, maybe just slightly lighter volume than that. But you don't want to be, if you're wrong by a penny and it takes off from there, I can understand the question for sure.
Agreed.
The next set of swing points. So if you want to consider lowering it, the question would be where would we be paying attention, where would we be looking at? And you'd go back, in essence, to October 7, 2016. Well, that low is $1.14. Well, that makes your 113 sound smart. And November 14th, 114. So you have a set of swing points out here that say $1.14 should hold as support. So I think you should lower it a tad. And if it closes below that, then
I should lower it. I'm sorry.
Yeah, I think you should lower it. I don't think you should have it as 1 penny below the swing point, because a test could be moving below it and then bouncing right back above it. So that one penny could really be problematic for you. I hope you're not too heavily weighted in this.
No, it's not bad, but it's more than I've taken a little more heat than I'm used to, and then I know. You're one of those that prescribe in certain circumstances the unexpiring option concept, and because it is in a 401ks, I've got time.
Yeah, and
so,
folks,
but I don't want to be. I'm sorry.
Sure. No, I was going to say, that's the other people. So, folks, what John is referring to there is when I take a look at a stock that I'd like to invest in, and it's in that dollar range or less than $1, what I like to do is figure out how much money do I want to risk, and then divide that by the price it's selling at, buy that number of shares, and stick it in a drawer. And I want to have a good reason as to why I'm doing it. In this case here, I believe that John has a good reason. I don't know why this is showing up like this on my chart here right now, but I know that Great Panther, here we go, has a high volume monthly high that has not been tested. And so at some point in time, this gets back to either the 355 to 504 area out here. So, that eventually at some point in time, looks promising. But back to your question now. So when I have an unexpired option, I've already decided what money I'm putting at risk, and that's the deal. And I just leave it in the drawer. But yeah, I think you need to move your stop a little bit lower than where it's at $1.13. I think that's too close to a testing area. All right.
I know we're going to be running out of time. What's a little bit lower? I'm sorry, but I know we're running out of time.
What I would do is just go back and take a look at the last 10 days average true range from top to bottom. Sum those up, divided by 10, multiply times 1.618, something like that to use as your stop. All right?
So say 97 or something like that?
I'm sorry. Hey, send me an email. Steve at TFNN. Hey, folks, have a great day. Stay tuned for David White.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.